Ching, ching. All right. There we are. The virtual chings.
There
All right.
we go.
Even though it's
Welcome
plastic.
back, brothers. Brother.
You know what? We made it 2 weeks in a row.
Oh,
2 weeks
Rip
in a row.
Hogan.
That's crazy. What is going on here? We almost didn't. Nah, it was pretty safe.
yeah.
It was
No, we
pretty
were
safe.
here. We were here.
It
We even
was.
confirmed this morning.
But
Three of
everybody
us were here.
Yeah, everybody wants to do stuff with us now, so it's kind of tough to pull everybody in, especially the big guy down there. Anyway, let's do some introductions. Top left is me. I am the retail ape who will hodl forever until all of his stocks are bankrupt. That's me. Just kidding. Bottom left is the other ape.
Where's the lie?
Otherwise known as I'll bring truth. Bottom left is JPM, the banker / ape. I guess call him ape banker. And top right is Daniel, Bitcoin Applehead, which crypto is one of the big things everybody's talking about. And then bottom right is our Quanticus Maximus. That's Rolls Royce Wells.
I do what I can. For you guys.
That's right. Yes, you can. There's not enough hours in the day for you to do
Not
that.
nearly.
Exactly. All right. So,
shameless plug. We're hiring.
there you go. Is this our hiring video? All right. So, I do need to give the disclosure, though, that we are not financial advisors. It's not financial advice. This information provided is surely for educational and entertainment purposes only. And we hope you are entertained. And please always consult a investment professional before making any financial decisions. So let's move on. And I will run down the list. I mean, you were pretty close on a couple of your numbers there, Daniel. It didn't change too much. But today, because today was kind of flat. Anyway, so S&P 500 is down 0.27. NASDAQ was down 0.67. You ask why I do have the red background, because basically Dow Jones was up 0.04. So basically it was flat. So I deferred to the all red behind us because we know, and we'll talk about how inflated this market seems to be. WTI crude is just under $63. Gold is up 1% basically to $33.91. The 10-year is down 0.26 to 4.29. And Ethereum had a move today, plus 4.7% to 43.35. Bitcoin plus 0.44 to 114, and XRP plus 0.28 to $2.97 basically. So there's your reset. Let's get on to the agenda here. As I was saying, Daniel, you said the market is bumping their head. So meaning that we're at a top. I feel like we've been bumping our head over and over again. That escalator keeps going up and we keep hitting our head, but we keep scraping that head higher and higher. So what say you, Royce, and all of this past week? Is the market bumping its head or not?
I think it's trying to stretch probability. So I do think that we are at the very beginning of a brand new bull market. And I know you guys are going to go, what?
What?
But but given that the VIX is extremely low, extremely low, 16? There's going to be some volatility. That volatility will then cause everything to expand. And then that expansion, we're going to get more up. So we're going to get a temporary, like August is going to be a little bloody, maybe going into the first week of September. But I am expecting literally gangbusters into the latter part of September, October. Yeah, as Daniel says, and I won't steal his thunder, but there's something about a back and a baby. I don't know.
Baby back ribs? What?
Baby back ribs?
Yeah, yeah, that's exactly what he's going to say.
I don't think I said that.
Oh, okay. Well, what do you say, Daniel? What is your opinion, of course, because we're not financial advisors on what's going to happen?
My opinion, and I think I wrote about this in the Substack that we now have that everyone can go check out, is pretty much in line with Royce, is that, I wrote that we haven't touched the 50-day moving average in like 15 weeks or had a correction greater than 3%. And by no means am I calling for like this to be a market top. But when you look at just some of the indicators, things are a bit overstretched, and they need to, like Royce said, expand probability, which really just means they need to like take a breather, not be up so much to be able to make more room for the upside. When you look at a lot of the different historical kind of like fundamental valuations, I have a bunch, but I'll just give you one. If you look at the price to book value, we're currently at 5.3 times on the S&P, where in March of 2000, we were at 5.1 times. So, we're at pretty healthy valuation levels. Historically, I could go through a bunch and none of them look pretty. That being said, I don't really see, other than a black swan event, which I'll let Darin predict. I don't see anything that's going to stop this train, at least in a serious long-term manner. Now, do I think it would be healthy for the market to pull down at least like a full 5-10% for a little bit and like stay down there for a minute before we continue a bull trend? Yes, but could it be very quick like we saw earlier in the year? For sure. So my thing is that things need to slow, but yeah, like I don't see why we aren't still up and to the right in the long term.
Well, it's valuation. Yeah, you keep saying valuations, of course, and the extension of them, but of course we know it's those top 7 that keep extending it all the way. So something would have to happen to tech, and the likelihood of something happening to tech right now doesn't seem to be too likely. And it's like even if the other 493 experienced a 15% down, we'd probably still be up 1%. It's crazy. I mean, just because of the weighting of those top 7, which is dangerous.
Well, they do have AI on their side.
Yeah, that's right.
I'm just saying, it's like, okay, it's like the Industrial Revolution, but with AI. So it was crypto, now it's AI plus crypto, so we're not going anywhere.
Well, and the whole .com thing too. So it's just a matter of weeding out those companies that are just like in every other trend that played or pretended to be part of the big trend, but they weren't. And they're so far above those companies, but we keep creating new ones, right? I mean, we have these IPOs that are doing good and they're moving up, and I know Josh is thinking it too. It's like something's just got to happen. It really does. It has to. There's just
Darin,
no way.
I'm sure you just heard SPACs are now back, so you'll be able to invest in some of those.
Yeah, I was thinking of Eminem. Guess who's back?
I would just like to quote.
Gotta get one song in, Josh. Stop.
Laws of physics: an object in motion shall remain in motion unless enacted upon by an outside force.
Yeah, exactly.
So why try to predict when it's going to turn? Just get on the boat and ride the ride.
I'm not telling anybody what to do, but we're just when you do look back at history, though, the like Daniel was referring to, there's a lot of charts that are referring back to those years, 2000. It's all the 2008. It's like you look at the graphs, and I'm not going to bring up Fred again, even though I just did. But you look at the graph, and it hits up here.
Not going to bring that up. No.
And then you look over at 2025, and it breaks that little part, and it's crazy. It's crazy. But again, it's that whole with that argument about this time's different. So maybe it is. Maybe this time is different.
Maybe
that's all I'm going to say. See, I'm a kindler, gentler black swanner now. What'd you say?
So maybe this October will be different. Maybe.
Yeah, last October. Yeah. Mm-hmm.
Right.
Yep.
Okay.
We skipped June. We're just going to wait till October.
Yeah. Wake me when September ends. That's all I want.
Exactly. Because you guys were all saying September, and now you're saying it's moved up to end of October or end of August into September.
No, I've been saying August. I think you said September. Come on, Abe.
All right. We're all saying it will. It'll be just a matter maybe how much then. So what's this new indicator you're talking about there, Josh?
Well, I want to hear Josh's opinion. He didn't say anything.
Yeah. Okay, I do too.
Okay, so
okay.
I know. You could tell he had things on his mind. So
I usually notice that for some reason. This time I did. I thought he wasn't, but yes, go.
You talked about a lot about valuation, but the one thing that is kind of concerning. And I don't necessarily disagree. I do think that for a period, let's say we get a breather, for a period we can continue to go up. The one thing that is concerning to me is not necessarily valuation, but concentration. And if you go back to, you can make the parallels between like 99, 208. You can even go back to, but I mean, what I'm looking at is, I guess, a little bit more of a macro view and talking about like a percentage of the global stock market. If you look at what just, S&P 500 and specifically the Mag 7, they encompass 15% of the entire global stock market's market cap. And you draw some parallels and you start looking back in history at like the Nifty 50s and like the growth stocks are going on steroids and everything is, way up and to the right for as far as we could possibly see. And then you go, let's go over to like Japan, and there's the entire market went insane. And then that, that bubble burst and they had eventually ended up in like negative interest rates. And then the most, the easier comparison is always the dot-com bubble, because we're talking about tech and we're talking about insane valuations. And, back then it was Microsoft and all of the various, fly-by-night companies. And I think with AI, we're at, what do they call them? Like unicorn companies, these companies that have over $1 billion in valuations. There's now up to like 40 of them. And these are all AI startups. So these are companies that have no real, I guess, tangible numbers. It's all just growth and speculation. And so again, going back to like the .com, when we started to get to, I think at that point, the market cap was at like 36 trillion of they're like 17 trillion of the global 36 trillion. And they were creeping up around 10 to 15% of the global market cap. And I think that's kind of one of the things that's concerning to me, is like everyone is so concentrated into those few things that if that particular bubble pops and you look at 10 to 15% of the global market cap gets wiped off the face of the planet, we're talking, we're singing a little bit of a different tune here.
For sure. The only thing that has me saying that it's different this time versus the 2000 and the .com and even 2008. And the .com crash, basically they were, what did they call it? They didn't call .com as opposed to cloud. They rebranded .com to cloud, right? And the problem was the network was not fast enough to accommodate everything that was going out into the network. So basically people were like, hey, let's move over here, but they didn't have the actual network bandwidth. Cisco and all of the people that was basically providing pipe, we were at, 100 meg, 100 gig. Basically it was really, really slow. 10 meg, 100 meg. I think we had just gotten to gigabit speed, maybe, right, on fiber. But now we have 10 gig and we have 100 gig network. So that means we're more than capable of being in the cloud, right? And in the 2008, there were a lot of derivatives where they had basically, they would take a derivative of this, derivative of that, and derivative of this other thing. And so a lot of people were just going, me too, until basically everyone's like, no, we can't lend anymore. And then the house of cards fell, right? What's different this time is that the government's saying, hey, let's build more data centers. This is going to be a rehashing, at least in my opinion, of .com, the cloud. This is going to be like cloud 3.0, our internet infrastructure 3.0. The only thing right now that China is beating us in is data centers. We have about 250-ish hyperscale data centers. They have over 2,000. And that's why their AI can out-compute us right now. It's an arms war, but it's an arms war with data. So I think if basically those magnificent seven that you're talking about, if they're heavily investing in data centers, there's a good chance that they see the writing on the wall, know where the gap is, and are actively trying to close that gap to make sure what happened previously doesn't happen again.
Okay. The comparison though could be that .com and cloud, we finally caught up, and we might still be catching up, and we are still catching up right now with data centers. So maybe that drawback that we may see coming is the admittance of that these companies aren't going to make enough money until the data centers are in place, and that we can compute as much as we need to compute over here to compete. So that little gap between inception and completion, with all these other companies that are starting up now, maybe that's the comparison to the .com.
But I mean, that also just highlighted all of the things that I was concerned about with this particular, AI bubble comparison to like 2000 was you've got the hardware bottlenecks, which we are currently experiencing. You've got the liquidity issues, which are going to be a thing sooner than later, because we've got, like you said, we've got all of these various companies that are rapidly needing cash to scale up at a rapid pace, and they're all just doing the same thing. They're just copying and pasting. It's all like, I mean, I can file an LLC tomorrow and say I'm an AI startup, and with very little experience, just the right investors,
billionaire.
They're just going to start throwing money at me.
Yes.
And I can show like a framework of the things that can. I mean, I might. Well, we'll see.
It's a bank,
this extra cash that we've got. Let's see if we can branch
real
out.
JP Morgan.
Yeah. And so it's like, I mean, it just, to me, that the parallels between that and now are becoming more and more evident, and they're becoming more and more parallel. Like, we're just saying a lot more of the exact same things over and over and over.
Yeah.
And I mean, I hope I'm on the wrong side of history with this one. Like, I certainly hope it. I don't want, this correction, crash, recession, like whichever it ends up being. But there's a lot of writing on the wall.
I can give you an old one that's kind of just been pushed off to the side that could be that black swan. Is the China's is not over. That whole real estate thing is not over yet, and it keeps popping up about they were trying to fix it. They keep band-aiding it, but it's still a real problem in the real estate, and that is their economy, is real estate, and that still could have a global contagion. So we'll have to, as far as finances go.
I don't want any more of China's global contagions.
Yeah, no kidding. I'm talking about the financial world, not the health world this time.
Oh, right. Okay.
Well, maybe they'll stop building housing. They'll start building more data centers over there.
Yeah, no kidding. But you asked, Daniel, you got an answer then. You did that new indicator. Now, this is something I put in my 3 things. I don't know if you noticed or not, but go ahead and explain the new indicator, the cardboard one.
We got the cardboard box indicator.
Yes.
Which economists use as a proxy for retail demand, right? So you can think, whatever your favorite retailer, let's just think of like Lululemon, right? They're going to buy more boxes when they expect to ship more things. If they don't expect to ship a lot of things, they don't buy a whole lot of boxes. And I forget the exact numbers, but cardboard box inventory is at one of like the lowest levels it's been at since 2015. Now, I do have to say the caveat of that this could also be one of those tariff things where people brought in a ton of boxes ahead of tariffs, so they didn't have to pay an extra, 50 cents on the 50-cent box. And the article didn't talk about if you were to exclude that, what the number would look like relatively. But it is still one of those kind of indicators that I saw. It's kind of that's an interesting proxy for potential economic demand in situations. But if you were to take it at face value, we're all wrong and the recession is coming.
Okay, excellent.
I think the Lululemon one is because you haven't ordered as much lately. That's the reason that their boxes.
I actually the only Lululemon item I own I got for free. So
I thought you were about to stand up and show us. You were adjusting your.
Nope. This concludes our broadcast day.
We're about to see Lululemon.
I own I don't know 10 shirts. And I bought them all in Bali because they were $10. I'm not Lululemon's target market.
But they are yours. All right, so let's go to one of my favorite thing is a hedge fund, of course. So let's talk Bridgewater. And you said that they're dumping China. They're getting rid of Chinese stocks. Maybe this is kind of points towards what I was talking about earlier with this whole seeing something brewing that's actually finally going to come to light in China. So set us up with that one, Daniel.
Yeah, so I thought this was pretty interesting because I think it was at the beginning of the year, Bridgewater invested a bunch of money in Chinese equities. And just in their Q2 report, they sold all of their shares. It's like $1.4 billion worth of Alibaba, JD.com, Baidu, Neo, and Yum China. And that's like a really like interesting thing because, you know, they just had bought it and then they sold it. And the theory is that they're trying to like manage any potential fallout from China because they still see the economy there as not good. And this is on the back of Shanghai listed stocks, which is, you can kind of think of as like China's NASDAQ, of hitting the highest level it's hit in decades. So it's kind of like an interesting timing thing for them to do. It's like maybe they got that trade wrong, right? Who knows? And also like 1.4 billion, like I'm not sure of like what portfolio that's out of. You know, they manage like tens of billions of dollars. Like they're
do you know if they actually made profit? If the market is at its highest point now, 9 times out of 10, that means they probably made good money and they're just exiting when it was time to go.
Yeah, it was a pump
maybe I don't know.
Yeah, well, I mean, they are, but there are, you know, their Chinese investments are only up like 6% over the past 5 years. So
yes, but we're talking about. Go ahead.
Well, I was gonna say I don't want to, you know, nuke the hype about what's, you know, the potential of this, but there is one simple explanation, and it's like, you know, Ray Dalio has always been kind of the one that's carried the torch, or like the champion of like the Chinese investments for Bridgewater, and he just left.
That's true.
And I mean, I think they sold either the same day or the day after he left. That is when they liquidated their entire portfolio. So I think it could just be something, just a different philosophy or a change in philosophy now that Dalio's gone, and you know, the rest of the C-suite can just do whatever they want.
Darin, do you know the Bridgewater conspiracy theories?
Oh boy!
Oh no! Here we go.
Maybe.
So like one of like the weird things about Bridgewater is that like nobody like really knows how the trades are executed. It's kind of like this like black box thing that only like a few people in the firm know. And the theory is that they don't actually invest any money, and it's just a money laundering front from China to the US, because China was one of like the early investors in Bridgewater. And if you look at the return over time, like, you know, they do well for how much money they manage, but like they're not really like the best performing hedge fund ever, all things considered. And the reason they got so big is that they're just a money laundering front from foreign entities into the US.
First last week, now this. We're gonna get banned.
I can't totally buy into that yet.
There's like books written on this. Like this is
we can neither confirm nor deny. Arbitrage trade has no opinion on any of the stuff.
Right. And everybody knows that birds aren't real.
They're not. Yeah, you ever seen a baby pigeon, Josh?
Right. No, I haven't. They're all drones.
That's right. And birds, pigeons, other things, and mosquitoes, which are let out of planes in Florida by Bill Gates, right? I mean, all of that stuff.
I mean, he actually did that, though.
I know it.
That was a population control thing.
Yeah, exactly. Then we could talk about, you know, the weather changing events and all of this stuff.
Also, he needs to come do it again because they're out of control again.
But
in Singapore, we have genetically modified mosquitoes that are sterile. That's
what I'm talking about. That's
that like birds can still eat bugs, but like you don't get bit very much here. It's quite nice, I will say. I'm a fan.
Well, and they'll drop like sterilized males that will end up killing off the population because the females can only mate like once.
Aren't they doing that with men too? Sterilizing them through different ways, humans, so that there's not population?
Like people.
All right.
All the microplastics.
Yes, that's right.
I was really sad to find out that apparently gum is just full of microplastics, and I love
crap.
gum.
All right, I'm in trouble.
Just spit it out.
I'm not trying to reproduce anymore anyway.
No, just chewing it just releases the microplastics.
Oh, nice. Okay. Well, on a different story at another time, we'll just have a whole conspiracy thing show. Okay. I try to bring it in, but you guys are bringing it all this time. Awesome. So let's look at
not me.
Yeah. Just like move on, please. So what is this state-sponsored capitalism you're talking about? This presidential investor, and basically, to me, it looks like Trump is anything that businesses are doing now. He's trying to get a piece of the pie, not afterwards through taxes, but like as it's happening. So you want to expand on that? I know Josh would love to, probably for 30 minutes, but go ahead, Daniel. Introduce that.
Yeah, I'll tee it up for Josh. So, with this administration, we've seen them really kind of honestly take a page out of China's book, which is where I got the term state-sponsored capitalism from. So as we know, under Biden, we had the CHIPS Act, which was that big fund to give grants to onshore, chip production. But with Trump, it seems he's trying to take it in the way of, essentially buying equity in Intel for non-voting shares, right? So I don't think it'd be quite the same as them going out and buying $10 billion on the stock market. And it's viewed as a national, interest in America, making sure that Intel, because it's an American company, continues to be solvent and, producing chips. And it's nice that, SoftBank will be backing up our 10 billion with 2 billion in their own, own investment. And then if we look back, a few more weeks, the Department of Defense became the largest shareholder of MP Materials, which is the only rare earth producer in the U.S. And we saw, a huge spike in that. And we've seen another very interesting thing where any of the revenue from, AMD or NVIDIA, or not any of the revenue, 15% of the revenue from AMD and NVIDIA that comes directly from China will kind of like the US government will collect as a tax. And so it's been an interesting thing to see, this administration kind of weave its web in, kind of private companies and like financial markets, which is, part of the reason why China has been so successful at developing economically is that they just put money behind and kind of king make the companies that are going to, whether it's Alibaba, BYD, I'm sure there's a ton of companies that we don't even know of. And I find it interesting from the aspect of that. I think a lot of countries do have these kind of like sovereign wealth funds that like do really well and is good for the country. You look at like Singapore, like the UAE, but then it also is mildly concerning when you think of, countries like China. And then when, those CEOs like Jack Ma don't do what they like, they go to painting camps and learn to paint very well for a very long time.
Yep.
So I'll let Josh go.
It's just to add to that before Josh, it's like Biden was the setup, and the Congress really was the Congress. It wasn't Biden; he was just sitting to the side. But Congress was the setup with all the money that was brought in, and now Trump is like I said. This feels like good cop, bad cop. One set everything up with all the money, and now the execution's being done by the Trump administration. And if you look at all the people that were brought in, they all were business or stock related. I mean, you look at all the people that have been appointed, they are all very friendly with this business and stock market. And like you said, I think that reflects China. Go ahead, Josh. Do we have time?
I mean, for an administration that their soapbox coming into this was drain the swamp and small government, they sure are injecting their grubby little government fingers into everything. And this is one I don't really understand the point. Like, and especially as like with the 15% tax on AMD, NVIDIA. I mean, it's literally just a, hey, we'll pay. It's almost like a buy off or payoff. It's the 15% is literally just going to be handed to them in cash. It's not a tax. It's not a tariff. It's just an agreement that everything that you sell to China, we get 15% of. And so I'm assuming there's some kind of loophole that they're exploiting to avoid some red tape or something, but I don't know what it is or what the purpose is. The thing that is strange to me is, like, typically you don't get state funded capitalism like this except for either emerging economies, or you get like state interventionism when we have like tragedies, or if the government has to step in and actually inject some liquidity into some kind of market that is currently in crisis. None of that applies here. Like, I guess, and that's why I'm struggling to really understand what exactly is going on. Like, there's a lot of unknowns, a lot of uncertainty, which, I don't know if you've been following along, but that seems to be a theme that we've got going on for this entire administration so far. But this one is a little baffling to me. And all of the talking heads you're talking about, like, hey, have you ever seen a 15%, just payment, or almost like a payoff, or a, please let us do business with China and we'll give you kickbacks kind of thing. And nobody really understands what exactly is going on.
You said that there's nothing that seems to be making this worthy or needed, but I think it is. I think it's.
I'm not saying it's not worthy or needed. There's just no equivalency. Like, I can't point to something that there's no precedence.
It's what hasn't happened yet, though, right? I mean, I think it's because of where we're going. They're having to do anything and everything to try to keep from going to where everyone thinks we're going. And it's
why not slap like a 15% tariff on it, or a 15% tax?
That's the other way around.
This is just like straight cash, homie. Like, this is
Yo Trump with his gold shoes.
I don't get it.
Well, I think it was like Yellen used to do it, I think, to prevent things from happening on the front end by infusion. And I think that's what Trump's trying to do now with this, is try to get money on the front end instead of wait for it to come all the way back around on the back end. I don't know. You're right, though. Who knows? And we won't know until it all happens, I guess, and what the results is going to be. But I think there's desperation, if you ask me, on this, because he did another $1 trillion in debt, and we're going to be another $5 trillion by 2030 if this keeps up. So I think everyone sees where it's going, and they're just trying anything now, desperation, to fix that. And whether it works or not, who knows? I don't know. My 2 cents too. So we're both confused. That's why we are both wearing lovely palm shirts today. We called each other and said, hey, wear your palm shirt.
This is not intentional.
It was not, actually.
I'm just going to draw the line, Josh. If you wear a choker, you're out. You're out.
Oh, yeah.
Go grab some seashells out there on the beach. I don't even have a beach here.
Don't let him influence you.
No.
Wait, I'm single next week. I mean, right? I got to go all the way back to when I'm 16.
The glow sticks and the whistle and a choker.
All right, Royce. We are. I think we beat that one up quite a bit. Let's get to the chart, though. The crayons. Let's get this going. It looks like you've got. Well, I see. It's been so long since we've done this. Let me do the screen that we usually do, which is crayons and charts. After the Bell with Royce Wells, expert stock reading. What do they call them? Chartist.
Yes, I'm a chartist. I'm currently watching Coca-Cola. And currently Coca-Cola basically has been selling off since the beginning of May. And so I've been keeping my eye on it. I myself entered a position on Coca-Cola when it hit 115 and have been in since. I'm trying to see if, and I'm going to expand this out so that way you guys can see what I'm seeing. Currently, you see those dots up above. That means the monthly and the weekly time frame is saying that it's currently in a sell trend. That means in order for Coke to actually turn into a full-fledged long-term buy trend, it has to get up to about 140.84. But until then, we're watching basically the trend top and the trend bottom expand. The next hurdle that we have to get past is this light blue line that's basically right there. If it can basically hold this level and stay here for about another week. Notice that basically this guy is a little bit overbought. Z-Pro is a little bit poking out, so it basically was forced to retrace on this last candle that we got today. But I am expecting good things overall. Let me bring in the advanced band, which governs the apocalypse band, and see where it is probability-wise. And it is definitely on a very solid buy trend, and from where we're going, I do think that Coke and the people who are shareholders, which I am, basically have a lot of potential gains to have in the very, very near future. Looking at this guy on a more longer term time frame, Coke has just been going up, and there's nothing stopping it. Literally, COVID-19 meant absolutely nothing to Coke, because all it did was rise from $22 all the way up. There were a couple of splits, I think, in there. There was one split that happened in looks like May of this year, and that basically allowed it to cool off a little bit once it split. Basically, we got a little bit of resistance, but people are still willing to buy. And as long as they're willing to buy, it can continue to go up. I do see that on the long-term scale, though, that pink line is definitely outside the Z Pro, and the short-term trend is the only thing that's keeping this trend alive. So it's the little engine that can or could. So let's see if Coke can make it to all-time highs and potentially make it. Let me turn on the wall as well to see the absolute possible top. And somewhere within the next 2.5 years, there's a high probability that Coke may be all the way up to 181, not just at 118. So keep your eye on Coke, and we'll catch up with you later. Thanks again, guys.
All right. That was Crayons and Charts with Royce Wells here on After the Bell. And yeah, it looks like, so what you're saying, we need to have some, it looks like it's in a tight channel. It needs to have some volatility before it can go up, right? Is that kind of what you're saying?
Yep. It's been resting the last 3 or 4 months at this price level.
Yeah.
And I do think that that has allowed probability to expand. As you can see, that purple line extending up. And basically, it's going to try to fill it. So previously, I think 120 was the previous top. But now, because of it just hanging out here, 181 is. So how about another, 50% gain? We'll take that.
Be nice every day, all year. Let's go. Yeah, let's go to a sad story here.
Sad for who?
That's the story of one ape holding the bananas, and he was holding it for all. I mean, he had the bunch of bananas. He was about to eat them. He was going to enjoy them, and all week he was sure that he was going to continue his fire that he had from last season, and be the first one to win this season's. Season 4, week 1. But alas, along comes 24 hours ago, and it fell. It fell into my friend's hands, but I would still rather own it and not give the bananas to my friend, who is smiling big down in the bottom left corner, because I don't know if I've ever had a lead in a season, and so that's now I got to win 2 in a row to even do that. So congratulations, I guess. Josh, We kept it out of the evil empire's hands. Thank you.
We did, yes.
All right. So do you have
Daniel? We will have to stage a coup, just so you know.
Wait, you run the ship?
Believe me, watch the coup.
But he's a fair captain. He's a fair captain. As far as I know. Hey, Josh, what do you have something picked for us?
Yeah, I think this stock has some good genes. Let's go with AEO.
AEO.
AEO. That you're missing some vowels in there. Just
It's
AEO.
like yellow, but different.
American. Oh, wait a minute. We can rename this the what's her name? Sweeney stock.
Mm-hmm.
Okay.
Let me go back down to the daily time frame and switch back to my arbitrage band.
Hey, there's a good chance, Josh, that they don't know about that whole thing that's going on. So let's keep it a secret.
Absolutely not. All right. And I'm going to do one more thing. Switch that also to the daily. All right.
By the way, the only thing missing, Josh, is I and you. If we're doing the vowels. Go ahead.
I'm serious about that choker. Don't let him do it to you, guys.
I don't know. I'm uncomfortable.
He's like, okay.
I like to play with HR. HR is on the call.
I was going to say, do we have HR yet?
We could have gone the wrong way with the banana talk. All right. Let's see. 12:31.
You know,
I'm just surprised you didn't say the stock price.
okay, where were we?
Yeah, please let us go somewhere else.
We're going with retailer, American Eagle Outfitters.
Oh boy.
So this guy has a very, very wide range, from about 10.50-ish to about 11.50-ish. So that means each person gets $1. You just got to pick out where you want to fall. 10.50 to 11.50, 11.50 to 12.50, 12.50 to 13.50, and then 14.50 and above. Or 13.50 to 14.50. How you want to do it?
Okay. 12.50, 12.50 to 13.50, and then above 13.50. All right, Josh, you got the parameters, if you will. You are perfect. It's sitting at 12.30.
Mm-hmm.
Right in the middle.
Right in the middle.
I'm gonna go 11.50 to 12.50.
Okay. All right. And who are you saying is going next?
I mean, I'll give Darin a shot.
Give me a shot.
Who saw that coming?
We all know what's going to happen, but
it's okay.
You know what?
When October comes, I'm just going to go, Daniel, you're next.
It's tough here. You're next. He already demoted you before you've even been promoted. You know what? This is a banana republic. Anyway, let's go with. We're switching places then, Josh, because you took that and I'm gonna take below you. So I'm gonna do the 10.50.
Excellent.
10.50 to 11.50. And I will, now that we have picked. Do you guys know the story behind this stock? Besides besides the lines, well, there was it was blamed as being a racist type ad out there by this company, and her name is Sweeney. I forget her first name, but she's a really pretty
actress. Don't act like you don't know, Darin.
Yeah, he is a dirty liar.
She's a really pretty actress. I can say that. And it was a backlash, and there was trying to be a big thing about it, but then it kind of turned on them, all the people that were saying that, and everybody got behind them. It was almost like this whole thing was created to drive attention to American Eagle, because that's what you do sometimes.
It was a joke post that one of the dude that runs the Florida Man account is the same guy that posted that random AI picture, and then Lizzo retweets it and says some nonsense about, her genes being whatever. And then all of a sudden,
genes is in your DNA. Yeah.
Yeah. And then all of a sudden it turned into a race war.
Right.
And divided, the internet. And then everybody came out and they're like, oh, this was just some post that some dude made as a meme. And it blew up in this whole thing.
You gotta have something to talk about.
Yeah, and let's give them something to talk about. Yes, and it worked, and so it is now people who probably haven't even heard of American Eagle in a long time. All of a sudden now it's fresh in their mind. So maybe it was
even the president was tweeting about it. Like
exactly. Anyway, so that was the whole hum behind that. So who is next, Josh?
All right, Royce.
1250 to 1350. I got to give him up and to the right. I got to give it to him.
All right, Royce is hoping for that retail rotation in come out of tech and into all the rest of the stocks. And so, Daniel, you are 1350 and up by your choice. Right.
Sounds good. We'll see.
Yep. We'll see. All right, guys. That does it. We made 2 in a row. Can we do 3 in a row? There's so much going on right now at the company that maybe not, but we'll see. We will certainly try. Just know that as we get down the road, we got lots of stuff to talk about, especially with our business, how great it's doing, and we'll just tease you with that. Anything else, Royce, before we get out of here?
I'm just gonna have to ask you to stop teasing people.
Okay. I'm single now, so. All right.
That's all I got.
HR doesn't follow me out the door.
Turn into an HR meeting, huh?
That's right.
Yeah, right. We need to talk about a couple of these conversations you've had, Darin.
Yeah.
It's a good thing they're not recorded or anything.
So we have AI. Yeah. Do we have AI HR now? You got to go talk to a robot.
Absolutely.
Mm-hmm.
All right.
All right, guys. Elon's robots come in and, take care of you.
One of the dogs with the guns. Anyway, let's get out of here. We will talk to you guys next week, hopefully, and have a good week.
Likewise.
Yes.